Hi everyone, we're talking credit again. I think it's so important to cover a lot of ground on this in little bite-sized chunks. So I have Jackie Shapiro again with Shapiro Hearst. And what I get this question all the time, or more of a statement from clients that just say, hey, well, my debt to income ratio is a little high. So is that going to hurt my credit score? Do I need, you know what I mean? What can I do about that? So talk to us with the truth about if your income affects your credit score.
All right, so let's go ahead and include that and we'll make it a top 3 myths.
Okay.
So first myth is your income. Your income doesn't affect your credit score in any shape, form, or fashion, and it does not report to your credit in any shape, form, or fashion. Also, I get questions on, hey, I'm about to get married. Will my new partner's credit affect mine? The answer is no, unless you create a joint account together. And then the third top myth is where you work affects your credit scores. It doesn't. Your employment makes no difference on your credit scores whatsoever.
That's a huge, huge deal and a huge tip. So don't get concerned about that. Your income, your spouse's income, anything about employment, it does not matter. Balance to limit ratios matter, but debt to income does not. Thanks so much for watching. We'll be back with more tips. Remember, we want to do this to help empower you to make smart decisions and have peace of mind about home ownership. Thanks again for watching and happy hunting.
Have a great day.